Let us now move our attention to calculating the metrics for the financial strength analysis of the company. The first metric that we want to calculate under this parameter is the current assets to current liability ratio. To do that, I say equal to, go to the alpha tab. My current assets for the year 2012 is given by cell D12. So cell D12 is my current assets, divide by my cell D13, which is my current liabilities. So cell D12 divided by cell D13 gives me the current assets to the current liabilities ratio for the year 2012. I press enter. I copy this formula and I drag it to the right. And just to remind, current assets to current liabilities is nothing but the ability of the firm to pay the short-term liabilities from its current assets. Hence, the higher the number, the better it is from the company's solvency point of view. Let's go to the next metric. The next metric, which is called the EBITDA coverage ratio, we want to calculate simply by dividing EBITDA by the interest payment of the company. Now to do that, I am simply going to say equal to, go to the alpha tab. My EBITDA is for the year 2012 is given by cell D5. So cell D5 is the 2012 EBITDA for the company alpha, divided by my interest payment for that year. My interest expense for that year is given by cell alpha D7, which is the 2012 interest payment, and I press enter. This 23.6 times is the number that we have found out for the EBITDA coverage ratio for the company alpha in the year 2012. I press Ctrl C and I simply paste it to the right. Notice how this number has gone down over the years. The larger the number, the better is it from the company's financial strength perspective. Let's calculate the next metric now. The next metric is debt to EBITDA ratio. I say equal to, go back to the alpha tab. My 2012 debt is given by cell D16. So cell D16 is my 2012 debt, divided by the EBITDA of the company, which is cell D5, and I press enter. So the debt to EBITDA ratio is 0.6x for the year 2012 for the company alpha. I copy this formula and I again drag it to the right. Notice that the debt to EBITDA ratio for this company has been going up over the years, especially from 2012 onwards. The final metric that we want to calculate under the financial strength is the debt to market capitalization ratio. To do that, for the year 2012, I say equal to, go to the tab alpha. My debt for the year 2012 is given by cell D16, and I divide it by the market capitalization of the company, which is given by cell D21. So cell D16 divided by cell D21 gives me the debt to market capitalization ratio, and I press enter. I copy the formula and I drag it to the right. Notice again how the total debt of the company has increased dramatically since 2012, and therefore it has gone up quite a lot over the years. So in this way, we have also now calculated the financial strength metrics of the company, and we have done that for all the years from the year 2012 to the year 2016.